January ADP coming in at 107,000. That's a miss compared to the expectation of 150,000. Remember, they're just measuring private payrolls. The estimate was 150, coming in at 107. Good sector doing okay, plus 30. Services doing better as usual, up 77,000. And there's the non-farm payroll estimate of 185,000. That's Friday, but remember, that includes government and the private sector as well. So it's always going to be a little bit different. But in this case, maybe quite a bit different. We'll see what happens. December ADP revised down slightly from 164 to 158. I do want to highlight here the change in their wage calculations, which job stayers down to 5.2%, down from 5.4 in December. That's the slowest rate of wage gains since August 2021. Job changers 7.2. That's a big drop from the prior month and the smallest annual gain since May 2021. It highlights the data coming at 8:30, the employment cost index, which is something that Powell watches very closely. Looking at jobs by business size, the small business sector has been keeping pace with medium and large. There was some concern as wages went up, small business would not be able to keep pace, but they have been up 25,000, medium up 61,000, large employers greater than 500 employees up 31,000. And some of the job growth coming from expected sectors, some of it coming from unexpected sectors. There's leisure and hospitality right at the top of the list, as it's been throughout this post-pandemic recovery period, up 28,000. But trade, transportation, and utilities also doing well, up 23,000. You'll remember that UPS just announced a big layoff. That would not come into this, but it is interesting to see the strength there. Also interesting to see the strength in construction. But education and health services, another perennial source of job strength, up 17,000, while the information sector down 9,000. Contessa, ADP has been hewing much more closely to the BLS private sector data over the past several months. I'll just look up here. The difference has been over a 3-month period on an absolute basis, plus or minus 34,000. So that's pretty good for kind of forecasting the BLS, at least the private sector section. And we'll see if that causes some people to think, you know what, maybe that estimate we have for the Friday number is a bit hotter than it should be. Contessa?
All right, Steve, thank you very much.
I was just going to say bond yields did react a bit on this news to rally a bit. So yields down a few basis points, Steve, implying people are reading through to the Friday number.
Okay, so Steve, if you'll stay with us, we want to get more on the data and bring in Nela Richardson, ADP chief economist. So you got like a head nod there from Steve about the accuracy of the data and how it compares to the Bureau of Labor Statistics. Nela, give us a sense of what this says about the U.S. economy.
Hey, good morning. I think what we're seeing is a solid but slowing economy, and you can see that in the jobs numbers. Now, remember, January is going to be an active month in both of these indicators for the NER and the BLS number, because we both re-benchmark to the QCEW to make the numbers representative. But if you see through that technical update, what you see is a labor market that is slowing, particularly in industries tied to services and white-collar jobs. So there's actually 3 different narratives going on in this labor market. There's the slowdown in manufacturing that we've seen for the last few months through 2023. There is the resilience of healthcare and education, as well as leisure and hospitality. Those sectors affected a lot by the pandemic. And then there is the slowdown in information, finance, and technology, and the hiring, where hiring was on potential during the recovery, and it seems to be easing now that we're out of the heated job growth that we saw in 2022, early part of 2023.
We saw a real resurgence in union activity and pressures for new contracts from writers and actors, from casino workers, which had an historic contract come through last year. And for UPS, and then yesterday they said, okay, well, we're going to lay off 12,000 people. Are we going to see the after effects of these historic new contracts, Nela?
Well, yes and no. For ADP data, those contracts were built on the backs of striking workers, as well as negotiations. Now, we measure employees on payroll. So even if they're striking, whether they got paid or not, they're still on payroll. So they're not going to come up immediately. And if you look at the broader industry, it depends on which one, because a lot of industries, especially for white collar jobs, maybe even tied to the information sector, you're going to see large firms pay severance, which means there's not going to be an immediate pickup in the initial jobless claims numbers that we all watch every single week. But what I will point to is the premium. Steve mentioned the pay growth numbers for job changers and job switchers in the ADP data. That premium of switching jobs has sunk to a low of 1.9%. To give you a reference number, it was above 7% at the beginning of 2023. Now it's the lowest in several months, including before the pandemic. So the gains from switching in this market are very, very low, and it means that the market has cooled a lot since this time last year and the year before.
Well, that's a real switch, Steve, from what we saw last year when people got a boost if they left their current jobs for new jobs.
Yeah, and I think if you take a step back, Contessa, from this data, the thing that you see is perhaps just things getting back to normal. 100,000 on the private sector, that's a pretty good number in normal times. But remember, we're coming off a 200,000, 300,000, 400,000 as this job sector was still adjusting to the post-pandemic period. So what you see when you look at the 3-month average, for example, of job growth in the ADP number, it's around 130,000 or so. What you would see, hopefully, when we get past, remember, as Nela said, the BLS data is going to be a little corrupted by returning strike workers, leaving strike workers, that kind of stuff. But the private sector number was probably was stronger because of that reason. So it's interesting to see things get back to normal. And for the market, and I think Mike is really good on this issue here, which is you see things coming down to normal and how much concern you are that it keeps going down. Do we come down or do we level off? So that's what we're watching now. Things getting back to normal and whether or not they stay at normal or do they sink a little further.